Welcome to TheoTrade. This is Don Kaufman. Here it is, June 5th, 2017. The market's got about 3 minutes to go to the close, and we're going to finish up pretty much massively unchanged. Oh, all right, the S&Ps are down too. And lately, with some of the market action, this feels like an actual down move. All right, a little attempt at some bearish sarcasm in there. Now, what I want to cover in this evening video tonight is looking at the key products that are really driving a huge amount of today's marketplace. You know, one of them that today rallied and then ultimately faded was the XLF. Okay, be very forthright with you. Early in the trading day, the XLF had me, Don, a little bit nervous as to its rally, because if the XLF really does start to take off to the upside, that gives the S&Ps a clean shot into the 2460, and higher kind of level. And I'm talking this week. Let's be incredibly, clear, talking about this week. The other products that are clearly in play, we've mentioned the XLE, which is energy, which is also, again, kind of falling, massively unchanged today. But your other key products, once again, they're your Microsoft, your Facebook, your Apple, your Google, your Amazon. And, something we've been talking a lot about lately is the addition of all of these products together, creating our own little index. So we've actually got Apple plus Google plus Facebook plus Microsoft plus Amazon. So I was looking at this a bit earlier in today's trading session and realizing, and again, this idea was given to me by Doc Severson, who's been looking at this kind of, what we call the big boy index over here. One of the issues I've got is this just wasn't statistically significant for me. And what I'm ultimately saying, and again, these are the products that are really driving the market, right? But the issue is you have a $153 stock being added to a $1,000 stock, being added to another $1,000 stock. And, then Microsoft is only a $72 stock. So what I did was I went ahead and I normalized, this kind of what we'll call the big cap index over here. And this, to me, right now is even more effective than looking at the Nasdaq futures. When I say I normalized it, what I did, and again, I'm going to show you specifically so that you can kind of copy this. This is, and I will highlight it for everybody, okay? This is 6.5 times Facebook plus 6.5 times Apple. So the little formula that I used was I normalized the symbols, by ultimately just dividing their price into 1,000. So in the case of Facebook, Facebook is right around $154 product. Ironically, Microsoft, is in the half of that, which is right around that 72, 73. Then we come into like Apple, which is also ironically $154 product. Okay, so the math was really, really easy because then Google and Amazon are sitting ultimately right smack at 1,000. So all I ultimately did was take each of the individual stocks, like Microsoft, a $73 product divided into 1,000. It came out to like 13.88. I just rounded it to 13.9. So I entered in this monstrosity symbol of 6.5 times Facebook plus 6.5 times Apple plus 13.9 times Microsoft. And what I've ultimately got over here, again, is a much more normalized product. So it actually gave a baseline, for movement in the market caps that are really driving not only the Nasdaq, but driving the S&P futures. And again, if you ever need over here, we can copy and paste this stuff to you. Again, anything on thinkorswim is just a copy and paste away. But I thought this was kind of a cool thing to go over in what was utterly an incredibly slow day. Nevertheless, you will still see that this product is, grinding a bit higher in today's session. The other thing I'll point out is there absolutely is a difference. You're looking at this and thinking, 6.5 times Facebook. I mean, that's just a pain to input. But there absolutely is a difference between the 6.5 times Facebook, of course, and the Apple all right, plus Google, plus Microsoft. Again, I found it was much more effective, especially for those of you running technical studies, to normalize things. Now, on another front, I'm going to be presenting, okay, some data tomorrow evening. Again, tomorrow evening. And tomorrow evening, that happens to be none other than June 6th. It's 7 p.m. Central Time. June 6th, 7 p.m. Central Time. Some of the data I'm going to be presenting is involving a few new trades that I've ultimately been working on. And what you're looking at right here is one of the data sets. This just happens to be 14 weeks in the SPX of expected moves. I went ahead and I took 14 weeks of the expected moves. I also highlighted, okay, each one of the times that the expected move was breached on the week. That ultimately means at the end of the week, did we breach the expected move? Okay. And what you're going to find out is the data between the SPX, which of course is the S&P 500. Okay. I also ran data in the Qs. This is the QQQ, all right, which is the Nasdaq. For the most part, the Nasdaq you're going to see is explosive. And we're also going to be presenting a trade idea specifically on this front. Now, if you'd like more information on this, okay, you can go ahead and you can actually sign up right here at TheoTrade.com/ETF. It's TheoTrade.com/ETF. Again, that webcast happens to be held at June 6th, 7 p.m. Central Time. Again, TheoTrade.com/ETF. Not only will I share some of the data, but again, I'm going to get into specifics of how to construct trade ideas around this, knowing that, of course, the Qs are exceeding their expected move, okay, substantially more often than the SPX that's staying inside of the expected move. Thanks, everybody, for joining us tonight here at TheoTrade. Have a wonderful evening. Bye-bye.